Retail investors are panicking, with the fear index at just 22.72.
That's extreme fear. So everyone's selling off?
Not everyone. Institutions just triggered a 45% surge in corporate crypto buybacks to all-time highs.
Wait, a 45% surge while retail is terrified? That's a massive disconnect.
Exactly, and it's creating the most asymmetric opportunity of 2026.
Okay, so what are the key headlines driving this?
4 things. Corporate treasuries hit record mindshare. Cross-chain infrastructure exploded 258%.
258%! Incredible. What are the other two?
MYX Finance V2 caused a 47% price surge, and U.S. regulators just dropped 3 huge policy shifts.
Let's start with the corporate buying. Why now?
Buybacks surged 45% in a single day. Over 50 publicly traded companies are now holding crypto.
So they're following MicroStrategy's playbook. Is this just FOMO?
No, it's treasury optimization. They're creating a structural demand floor, buying when retail fears.
What's the catalyst they're watching?
The MSCI decision on January 15th. If they approve crypto inclusion in their indices, this accelerates dramatically.
And you mentioned regulators are also making moves.
Yes, and it's coordinated. The SEC announced an innovation exemption framework. The CFTC got pro-crypto leadership.
And the third move?
The Senate scheduled a markup of the Clarity Act for January 15th, the same day as the MSCI decision.
That's no coincidence. What would the Clarity Act do?
It could formally classify Bitcoin and Ethereum as commodities. That's massive for institutional mandates.
So these corporations aren't gambling. They're positioning ahead of regulatory green lights.
Precisely. Now, while that's happening, the underlying infrastructure is booming.
You mean that 258% growth?
Yes. Cross-chain protocols processed $850 million in 24-hour volume.
Institutions need that unified access across blockchains. It's not just theory anymore.
It's critical infrastructure, and it's evolving. Look at MYX Finance and its V2 upgrade.
That's the protocol that surged 47.83%, right?
To $5.76, yes. They announced zero slippage derivatives with SEC MAS compliance.
Compliance is the key word. The market is starving for professional, compliant DeFi products.
This isn't the 2021 yield farming casino. This is regulated financial infrastructure being built now.
Are there any other emerging narratives to watch?
Absolutely. The AI agent sector gained over 10%, and launchpads are up nearly 14%.
So capital is rotating towards more productive, specialized assets.
Correct. Protocols like SKR Mobile and Mutuum Finance, which just raised $19.5 million.
So to summarize, retail is terrified, but institutions are buying, and the core infrastructure is booming.
It's an infrastructure fear paradox. The market's structural health is improving while retail is on the sidelines.
That creates a major value dislocation for anyone paying attention.
Focus on fundamentals, not sentiment. Corporate accumulation, regulatory clarity, and infrastructure adoption.
This is moving so quickly. How can our listeners possibly stay ahead of this?
That's why we deliver the Crypto Pulse every 12 hours. Subscribe to Moonward Capital so you never fall behind.
So you get the key analysis before the market fully reacts.
Exactly. Remember, when retail panics, institutions accumulate. Don't be on the wrong side of that trade.